Anything that changes in terms of income tax and how that affects your wallet, all of that is going to be important to watch out for. Other than that, the D-Street trend in April, what the April seasonality has been, what can we expect heading into the new financial year, as well as the first month of that financial year, and lastly, March auto sales, how the month of March has panned by for autos and what kind of numbers are we headed for on the 1st of April. All of that and much more we'll be trying to cover on the show today. Before we do that, here's a roundup of what the market session has looked like. Yes, of course, truncated week upon us, being a holiday on Tuesday as well as Friday this time, but the kind of moves that we've seen have been no different than the kind of cuts that we saw on Friday for our markets. 2.25% cut, so in fact deeper cut, 488 points lower on the Nifty, 22,331 is where we've shut shop, 16,000 points lower on the Sensex, 2.25% cut over there. It was Nifty Bank that was battered in trade today, a lot of which had to do with that RBI's proposal on net open positions and the kind of exposure that banks can now have to the dollar deal. All of that was upon private sector banks, at least, because Nifty Bank overall was lower by exactly 2,000 points, a 3.8% shave off coming in on the Nifty Bank index. India VIX was up 4%, 27.9 is where the India VIX is at. In terms of the Nifty gainers, you had names from the metal index. Hindalco did well. Coal India has done well, and on the flip side, ONGC, Power Grid, all of these names have done well. Even from the broader end of the market, sectorally, metals were the least losing sector. Good moves from some of the aluminium names like Nalco, SAIL, all of them have done well. But if you take a look at the top Nifty losers, it's a 5% shave off on Bajaj Finance in trade. Large private sector financiers have lost the most. That was followed by Bajaj Finserv. You have cuts on Jio Financial, HDFC Bank, Kotak Mahindra Bank, or some of these were the top losers. Followed by SBI on the PSU side. You had Interglobe that was under pressure on the back of crude, once again surpassing 115. Axis Bank, Adani Enterprises, Shriram Finance, Bharti Airtel. These were some of the Nifty losers as well. Just checking in on what the broader market has done, 2.68% cut, so 2.7% cut on the Nifty mid-cap index. Small-cap index also similar, 2.6% cut over there as well. That is what the market texture has been like. On the flip side, if you take a look at sectorally, we did tell you that Nifty Bank was one of the biggest losers, but Nifty PSU banks particularly have also lost quite a bit. Union Bank, Bank of India, Punjab and Sindh seeing cuts anywhere between 5 and 7%. And you had on the flip side from the broader market a select handful of stocks that did well on the back of either order wins, the case for Thermax, KNR Constructions, Enviro Infra, or positive business updates. Insta Helps surpassing 1 million users in the month of March. On the back of that, Urban Company did well. That EPL merger playing out, that also did well for the stock. And IRB Infra trading X bonus in the ratio 1:1 also saw some very healthy gains for that stock. So Harsh, all in all of this stood out, but really the conversation today was about crude and rupee.
Absolutely, the crude and the rupee, as has been the case for the last couple of weeks, in fact. But Sajid here with the FNO snapshot of what those cues seem to be indicating. Sajid, of course, a new month as well to start off in terms of April, but what are the cues indicating in terms of levels?
Thanks, Harsh. If you look at what happened in the FNO market on Monday, it's primarily unwinding of position, especially the long positions, and we saw the Nifty ending the entire session at 22,331, below the 22,500 support level, which it was trying to hold on for most of the day, finally ending 2.14% down. But look at what the open interest position has there, right? 50.64% jump in open interest position in the April futures. That gives you an indication of how much of the short positions got built during the session, especially in the last half an hour of trade. Half of that positions came in last 40-45 minutes because the Nifty was trying to hold on to the 22,500 level. If you look at Nifty Bank, again, that's also something which saw a brutal cut, 3.8% down below the 50,300 mark. There's a premium of 483 against the spot, which also gives you an indication of the kind of shorts that got build up in Nifty futures, as a result of which the open interest was up nearly 46% during the day by the end of the day. Open interest change on for Nifty gives you a good indication where it happens. through the day we saw 22,500 being a good support level with put writers holding onto it, but towards the last 1 hour we saw a lot of call writing happening and the index slipping below the 22,500 to end below to end around 22,300 odd or level. Look at the distribution level. It gives you an indication the kind of fight which was happening with call and put writers. Even though the put writers are still ahead of it, there is a lot of position that got shifted to 22,400, 300, and even eventually to 22,000 here. So there is now a strong support which is getting built up here at 22,000, and when the market reopens on Wednesday, you're going to see if the global cues are not going to be positive, if the West Asia crisis continues to be the way it is, you're going to see further pressure coming on the Nifty there, heading towards the 22,000, because that's where the next big support is coming for the Nifty. Back to Harsh.